All right, so let's start right now. So here is exactly where we started the day. Okay, I took a short here and ended up being stopped out for a small loss. And looking back at it, it was a little bit too premature by 2 minutes. Okay, so what I did here was like since I wanted this liquidity pool, okay, on the 4 hour right there, which is the Asian low on a bullish H4 candle close. So I knew that there was a lot of liquidity there. Okay, so since we came so close to that low from literally one tick, I thought that this the pullback to this area would only be a fake out, so we could have a short here with our H1 strategy. Okay, so what was happening here is that we were trading like literally here, okay, and it was a bearish candle. Okay, we were like this, and what I was trying to do here is wait for some sort of raid to happen during the first 10 minutes of the macro, and then get some sort of 2022 model or inversion breaker. So this, I wanted to see a sweep and then some sort of 2022 model to target the H1 draw. And once we had that, I would have tried to long, because I would have said like the liquidity pool that would have been swept by this trade would be enough for me to expect a short-term reversal in the marketplace. So what happened here, okay, is that right there, what happened is that we had SMT, okay, at 955. So I did not, once you have SMT at the internal high like this, you don't really need a raid, okay. This will act as your raid. So what I did here is I located those sellers here, okay, those buyers, sorry, because it's a bullish order block, and I said that if we disrespected this fair value gap and closed below this bullish order block, and that would become a bullish breaker, a bearish breaker, sorry, I would have went short targeting this low, okay. But it was a little bit premature because look at the hour, okay. So here is the big candle like this, so I entered around here, okay, with my stop like around here, okay, almost, and I was trying to target this low and a little bit more. But what ended up happening is that this candle is at 56, okay. So I'm always looking at the 5-minute candles, okay, and 5-minute candles are a great indication of if the like who's in control, okay. So if we rejected this and created a 5-minute candle closure, I would have known that this low would have get swept, okay. But what happened here is that this is just the opening of the new M5 candle at 56, so 956. So I had still a whole 4 minutes for that candle to not print bearish, okay. This is a little bit more advanced, but this is what happened, and I should have waited for the entry at 58, for example, okay, and tell myself that, and ask myself if there was more probabilities of us closing bearish on the M5 than turning back and stopping me out. And yeah, so this here was just a little bit too premature. Really nice trade since we had our higher time frame draw, but the thing is we ended up hitting the stop loss immediately and displacing up, and this is exactly where we closed at 959. So this shows you that it was a little bit premature because I still had 3 whole minutes to make some sort of move and take out my stop loss. Okay, so what I should have done here was wait for an entry at 58 and don't take trades. Even though you're super confident with the draw, do not take trades if the M5 candle is there's too much time between the next closure and opening of the next M5 candle. Okay, I hope it was clear. Does anybody has a question about this? So like I'm always looking, like when I see a 5 minute fair value gap or 1 minute fair value gap here, I'm always looking at the M5, okay, to see how it closes. If it closes bearish, it's an extra confirmation that this low is just low hanging fruit, okay. But what I did wrong here is that I was really too focused on the M1. So what happened is that here at 56, okay, it was still 3 minutes until the M5 candle closed. So I should have waited at least at 58 to see how the candle was looking and determine if there was more probabilities of this candle closing bearish, so this low would be low hanging fruit. Okay, so super advanced concept there. But I mean, took a small loss here. And the next trade, I'm not gonna lie guys, this was an absolute A+ setup. Okay, so how do I see this? Okay, it's a concept that I have also with inversions that I built myself, is that if you disrespect the last gap inside a leg like this, okay, it's your first confirmation that you have your change in state of delivery. Okay, so this, I called it CISD. So this is my first confirmation that tells me that market is in a buy program. Okay, and since we're trading so close to these highs, okay, and market does not like to put on equal highs, I know that this high will get taken out. Okay, so what I'm waiting for is some sort of big manipulation down that creates a fair value gap, and then get up, inverse this gap, and target the highs. Okay, so if a bearish fair value gap here, try to locate some buyers and some sellers here with order blocks and breakers, and once we get above it, we take the longs. Okay, so here, okay, I'm gonna just play it out quickly. This is exactly what happened. Okay, so we got the sweep here, okay, and let's keep going. And now we started chopping super heavily. Okay, and that's the thing though, no news Mondays, no news Friday are not high probability days, that's for sure. But I always used to trade them. Okay, I always trade them, and I always do good in them. But the thing is, it's harder in the summer. Okay, these, like, since summer months are super low volatile in and of itself, once you add the Monday no news and Friday no news, it's just even uglier price action. Okay, so here, okay, what happened here? Okay, which I mean, it is absolutely A+ setup. Okay, you look at this low. ES just swept this external low, okay? And what happened here is that we had external SMT, okay? Right there, but external SMT, okay? We swept some sort of lows here. We tapped inside that 5 minute fair value gap. We have our change in state of delivery here, and we know that we are going to drop towards these almost equal highs, okay? So this was my drawn liquidity. Okay, so what I said to myself is that, okay, I see that there's a lot of sellers there. Okay, since we keep going down like this, if you keep going down, there's a lot of sellers that are going to step in once price comes back there. Okay, to try to keep pushing price down. But what's happening here is that we had such a big accumulation, and since we had SMT at the low, I had conviction that this low did not have to get swept. Okay, I did not consider these lows being equal lows, so I did not care. Okay, so what happened here is that once we got above all of this accumulation here, I was confident that since we had an inversion, an SMT at the low, an order block, a breaker block, that sellers would get squeezed and that this short-term high would get swept. Okay, and the thing is, 85% of the time it will. Okay, definitely not today. That's absolutely unlucky. And guys, you gotta trust me on this, but you will not see this setup fail. Okay, on the bullish side, like how I'm gonna teach you this model, you are not gonna see that fail often. Okay, like a structure that looks like this does not tend to fail. Okay, so exactly like this. Okay, so what happened here is that it looks like this. You swept, created some sort of thing like this, and then you got up. Okay, just by looking at the structure. Okay, changing state of delivery here, almost equal highs. Okay, sweep the low, respect those fair value gaps, disrespect that order block, disrespect that inversion, the bearish fair value gap, create an order block on the bullish side. I had every single confirmation and SMT at the lows. Okay, so when that shit does not hold, I hate to blame it. You know, I'm not the guy that blames everything on market market condition, and I will never. Okay, but the thing is, scalping with low volume is immediately lower probability. Okay, so what I did there was I entered, okay, inside this candle. Okay, so I entered here since I saw there was volume, and I was saying to myself, okay, we are going to close above this on this candle, and this take a little bit more time to comprehend and to execute, but this is what I did. I entered exactly here, okay, and I had my TP being there, and I wanted to hold to external, okay, and I'm gonna say why I was trying to hold to external. It's because accumulation is the fuel of every big move. Okay, so once I saw that we accumulated like this for an hour, I thought that since we had SMT at the lows like this and we were gonna push up, okay, if we were gonna push up, we would probably go and draw towards these highs. Okay, this is what I was saying to myself. So like once I saw this setup, I was in, okay, boom, and I tried to target these highs. Okay, so right there, like you will immediately see that we start wicking those highs, and once I saw this death candle, I knew I was cooked. Okay, there's nothing you can do about this. You're cooked. Like this level, you're not cooked until you close below this inversion level. Okay, so I was not cooked immediately there, but like once we started closing below and creating like this bearish order block, you're done. Okay, so here I had my stop right there, just below, just above, a little bit above this order block here, below this order block here, and ended up being stopped out. Okay, and I mean, okay, this is a purely A+ setup. Okay, it will not fail. You could go back in the data and try this exact setup. It will not fail you. Okay, market draw to equal highs when there's SMT and you're holding bullish fair value gaps, disrespecting bearish fair value gaps, creating bullish breakers, bullish order blocks, bullish fair value gaps, bullish inversions. These are all confirmation that add to the play. Okay, and one thing more, okay, I will say about this play is that it was so A+ that it was even aligning with my H1 bias. Okay, so what happened here is that we swept the London lows, okay, and we closed like this. So I would not consider this being the drawn liquidity if we don't close bullish, but we did. Okay, we were here when we were looking at the trade, so I had this as being my H1 drawn liquidity. So imagine I had every single confirmation that told me that this was the high that was going to get taken, and ended up being stopped out. That's fucked, but this is the reality of trading, and you really got to protect yourself in those days. Okay, there's a lot of great trades also in the day that I want to talk about. So here is the loss I took, premature. Okay, noted. I am always, not always, but a lot of premature trades, I tend to win them because I get a good feel of the market, but today I did not, so unlucky. Lost 2 losses. Okay, that's definitely heartbreaking, but it happens. Okay, but what's happening here is that we had super good setups also. Okay, what I want to talk about is there's some setups here that I did not show you guys about, but you could definitely use them. Okay, and you can make money with it every single day. Okay, I just want to see. Okay, perfect. Okay, do you guys have any questions? Hey man, did you? Okay, no questions. Okay, so here, okay, what I was trying to look for here is that I knew that since we were accumulating like this, once if we rejected those lows, okay, so we were like this, okay. Once we rejected those lows and started to climb back up, I knew those equal highs would get targeted. Okay, this one. So what I did here is I was looking at the M5. Okay, so I was looking at the M5 here. So what happened here is that we ended up sweeping all those lows, okay, and closing back in the range inside this M5 fair value gap. Okay, this is what the 30-second model. okay, and as it was exactly here, okay. So what happened here is that we swept 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. Okay, 50 minutes of accumulation. Okay, we swept it and we closed back in the range bullish. Okay, so I expect this zone, okay, to at least give me 10 handles. Okay, I expect a zone here on the 30 second to at least give me 10 handles. Okay, so I scale back to a 30-second chart, and what do I see? The same exact thing that you're gonna see on the 1 minute chart. Okay, so this is definitely your kind of turtle soup kind of play. A 5 minute close back in the range after big accumulation, and then you have this. Okay, but what I did there, okay, I entered on a on my account, another Top Step account. I did not call it out. I don't want to call out trades on that day, on those type of days. Also, when I took 2 losses in the morning. But what I did there is that I had my entry here, okay, and I was targeting at least a little bit more than 12 handles. Okay, it was negative RR, but I did not care. Okay, it was like this. So here I got filled here, okay, and I'm not gonna lie, it took a lot of time to get up into this high, okay, and it pissed me the fuck off. And this will show you, okay, if you're getting so close to a high and it starts rejecting, there's just low volume, because in normal days, if you go close to a high, you will sweep it, will take the liquidity. So here I was still in the trade, and what it end up happening is that once we swept this high, okay, once we swept this high, I put my stop loss super tight, because I really wanted a big push, and ended up being stopped out, okay, for a super small profit, but then ran to my TP, okay, because I did not want this trade to end up being a loser. So mismanaged this trade for sure, but in those type of conditions, you want to be super careful, and I think I did the right thing there, definitely. So here was a super good entry model, which is the 30-second model that I teach. Okay, super good model. 50 minutes of accumulation, sweep, hold this 5 minute fair value gap. Everything was A+ about this, okay, and I think even there was SMT at the low, okay. If I look at this exactly, so there was SMT, like still the higher, the external SMT was still alive, okay. So there, good trade here would have give you some points there, really nice. And I took another trade on that day that I will okay, no. Let's come back here, and I will show you guys a something that is super good. Okay, so this was the first trade that you could have taken. Okay, but here, okay, just look at this. Okay, super. This is magic. So here, okay, is a 30-minute chart. Okay, but like I told you guys, what I do is I always find my drawn liquidity based on higher time frame closes. So if it wicks, for example, it sweeps this low, close back in the range, I try to attack the high of the same candle. Okay, so here would become my drawn liquidity. So what happened here is that we had a reversal pattern on the 30-minute. So we swept the low, okay, closed back in the range, super strong. Okay, so I knew that since this draw has like at least 85% chance of getting tapped, okay, if we would go down, it would only be the wick created. Okay, so this is basically the power of 3, and you can play with every single candle. Okay, so here what happened is that this fair value gap exactly was aligning with a M5 order block. Okay, here, so what you could have done here is you could have entered inside of this this 2-minute fair value gap aligning with the breaker. Okay, do not be a dick for a tick here. You could just enter at like CE of this fair value gap, put your stops to break even, and target this 30-minute high. Okay, that's what you could have done. So you could have bought here, okay, and you would have hit TP pretty easily. Okay, super good entry. I see someone in the group does that also, and yes, I do that, and I will do it, but only in certain cases. And those are the type of trades that I will take with you guys in the morning. But unfortunately we had some slow PA. Okay, and I took another trade. This I did not take it. I took this 30-second one. So I ended up being 2-2 on the day. Okay, so here, okay, I will show you guys super good example here. Okay, let's keep going. So see guys what's happening again. So you're gonna sweep, okay, this low, and look at this, soup the low. Okay, once this candle closes on the 5 minute, you have a scalp here that will give you at least 10 handles. So here you would try to scalp this and try to get your 5 handles, and you will. Okay, boom. This will happen so many times. Okay, and this is the same pattern, but I'm telling you, this is what you need to see on a chart in order to make sure that you have the right drawn liquidity. Okay, this pattern here does not mean anything if you don't combine it with what I'm teaching you on the M5, the M13, M15. There was even a trade that you could have taken on the M15 at the beginning of the day with the same trade here. So exactly here, you sweep the low. Here, you close back in the range, so you know, even though the price would try to go down, to dig down and sweep this low, it would still have to take this high. So what you would have done, scale back to a 1 minute chart, and this was your fair value gap that would take you and deliver you to your draw. Okay, and this could have been a trade also. Okay, I'm telling you a lot of trades that you could have taken, and super good trades also. These are super high probability trades. If you take them in backtesting, you'll win. You have so many good results with those trades. Okay, so right there, premature trade, I would not consider that good. I'm not gonna lie. This, I don't really trade them, the 15, but they're super good also. It was a pretty clean trade. Okay, I only used 30 minutes and 1 hour though, but really clean trade. Here is my A+ setup ended up failing, unfortunately. This A+ setup also, this A+ setup also, this also is kind of an A+ setup. Why? Look at the hour, 1:10 p.m. Okay, what is this? Macro. Okay, macro, 1:10 p.m. Okay, shit, my fault. 1:10 p.m. That's the macro, so you expect some sort of raid, and once you close back in the range bullish, you can expect to have 10 points inside of this candle. Okay, and yeah, so here could have had another trade inside that 1 minute fair value gap for 1-to-1 here. Pretty easy trade again. So let's keep going. Okay, I'm gonna show you the real trade that I took after that, because I was not looking at the chart when everything like this was happening. After I took that trade, I just closed the chart and came back a little bit after. So here, okay, what ended up happening is that I saw the same thing. Okay, it was my ping pong model. Okay, so here we swept higher time frame sell side. Okay, and I knew the low was putting during the macro, so super nice confluence. Okay, so right there, I was telling to myself that okay, we're bullish on the higher time frame since we swept sell side. Okay, so here I was willing to wanting to see if those fair value gaps would hold. Okay, and if we would disrespect this gap here. Okay, and if we did, by creating some sort of breaker or order blocks, I would have entered and tried to scalp this scalp this high for the ping pong model. Okay, so this exact model here. Okay, but what I would have wanted to happen was this: as soon as we close above, boom, I scalp the high. Okay, since I was higher time frame bullish, since we swept sell side, immediately rejected it, then tap the bearish fair value gap, create a bearish fair value gap, hold the bullish ones. Disrespect the bearish fair value gaps, create bullish fair value gaps, create bullish breakers, bullish order blocks, a lot of confirmations, and even internal sweep. Okay, so this is what I was wanting to look for. Okay, what ended up happening here is a sweep, a single leg sweep on the 2 minute, which is one of my bread and butter trades, and those trades I will enter immediately once we close above this this inversion. Okay, on the 2 minute, because I don't trade 1 minute inversion, I only trade 2 and 3 minute. Okay, so then I scaled back to a 3 minute, saw if there was a fair value gap, did not see anything. So there's two things right there that I'm looking for. It's either there's a big death candle bullish that closed above it and then pulling back to this and trying to long for this high, okay? Or you need, if it climbs slowly inside the inversion, you want a change in state of delivery. So you want an order block to get put in and then try to long this, okay? So this was perfect. I had some sort of lower time frame confirmation. So I had a sweep, okay, which tells me we're bullish. I have, we're tapping and rejecting a bullish for value gap, which tells me we're bullish, okay? Right there, I'm looking for the singular for value gap that created an internal sweep to get inversed. That will tell me that we're bullish, and we're looking also for a change in state of delivery, which is the formation of an order block. Okay, and tell me that will tell me that sellers try to push price down here, but buyers bullied them. So once they have the chance to cover, they will cover. Okay, so here what ended up happening is exactly this. So what happened here was that we kept rejecting. So here, okay, what happened was that I entered one con at this close here, okay, since I did not want to get left out. And once we tapped back inside this range, I entered another con, okay. So I was in two cons, like almost here, okay. And what ended up happening was that I had my stops almost to the CE of this week because I just did not like the price action. I just wanted to not put a lot of risk. So 6-point risk, nothing at all with two cons. So here I wanted to target this high, but since I was higher time frame bullish, okay, I was willing to let one ride towards this high, okay. And this would have been my last confirmation and kind of the last line of defense for these sellers to step in. So I went in, took out a half here, okay, took out half here. But the thing is, I entered here, so ended up rejecting and hit me to break even, okay. So I made barely any money. I made like $100 on that trade, $125 on that trade. And I could have made if I got out here, I would have made like 320. So the thing is, it was a pretty good trade. I was right to let it ride, but market condition did not give me the possibility to hold. All good. And I mean, then we kept chopping, and as soon as you see that we close above this, this is your confirmation that this high will get taken out, okay. Just by looking at higher time frame structure, this is exactly what you want to see. Once you get above those sellers here, they are going to start panicking, and they're going to put their stops to they're going to cover inside of this zone, okay, whole zone here. So here could have been a buy here again, and with your stops right here, and you let that shit ride a little bit, okay. So you could have done this for sure, and for sure you would have went out at this high and tried to let some more ride 3-4 handles after that, for sure, but would have ended up being stopped at break even here, okay. So a lot of good trades you could have taken today. I mean, always with the same framework as I told you guys, by looking at the sweep and close of the liquidity pools, and knowing that the fact that the wick of the closure, the high of the closure, the low of the closure will get attacked in the first few minutes of the open, okay. So I'm gonna take a look at those questions here. No, I fucked up. I did not record it, unfortunately, but man, shout out to you, BZ. Yo, do you guys have any questions? But yeah, there was plenty of trades that you could have taken. For me, the two best trades ever on the chart for me was this one, okay, the inversion breaker with the external SMT and the change in state of delivery here, okay. And the second best trade would have been this, and it's absolutely A+, because you have a sweep, okay. The only thing that is not A+ about this setup is that it's not in a macro, okay. but this also is super good trade. This also super good trade, and this would not I would not consider that A plus at all, but still worth trying if you did not put any risk on the day. So here I wouldn't even consider this being a trade, so bad loss. So this is 1, 2, 3, 4, 5, 6, 7 ways to have taken at least 10 to 15 handles in the market. Okay, and I explained that everything in here. So yeah, I'll do the charting for gold. Okay, let me cook. So here I'll just put a screenshot here just for yeah, fuck yeah. So let me just put a screenshot like this. Okay, I'll send that to the Discord. No, send that here first. Okay, so here what you could have done in gold, let me see. There was a good trade on CL that I saw also, but the thing is let me see CL. I remember seeing this exact thing on the H1. Once we rejected this H1, this is what happened. Okay, we rejected this H1 high. Okay, it was closing super strongly in the bearish side. I knew this low would get taken, so I scaled back to a 5-minute chart, and I saw this breaker on the 5, and I knew that if we tap this zone we would get the 1-to-1. But the thing is, it was a scenario that the H1 had no down wick, so it was a 50-50 after this to try to take the shorts. So it ended up being a winner. But these are not the type of trade that I'm looking for. I'm really looking for that H1 low to not get swept, so I have extra confirmation, because I really am picky on those trades. But I would have taken that. This is a really good short, like A plus short, if the wick was a little bit bigger. Okay, super nice. And here on gold, the only trade that I really see is at 11. Okay, since how I would have looked at it is that we swept. I always go on the H1, like my H1 is my bread and butter, so I go on the H1, we swept the low, we closed back in the range. I know this high will get targeted. Okay, and we're also rejecting a 2-hour fair value gap here. Okay, right there, so right here, but I'm not gonna screw the price. So right here. Okay, so then you scale back to a 5-minute chart. Okay, you see, what do you see? This is a breaker. Okay, so you enter on that breaker. Okay, add more size here at that breaker, and you want to target this high. This is what you're trying to look for, and then you let some shit right here. But this is your base hit. Okay, this is easy scalps. Okay, so boom, you would have taken out half here and let the rest run to the other external here. Okay, but if it's at this hour here, I would have just got out. Once it's after lunchtime on gold, just don't trade it. It's absolutely cooked. Okay, is it clear? Was was it clear? Yeah, okay, perfect. Okay, and let me see if there was something on EU. Nothing on EU today. And let me see on BTC if there was something here. Yeah, nothing on BTC. You could have grabbed a nice scalp here on the short side though. Off of the H1 here, boom, close back in the range. You enter here on a bearish order, bullish, bearish breaker, sorry, and a bearish inversion here. So boom, trim at this low and let the rest run. This was a good short here to take. on the H1. I don't see anything else though. A super good short here on BTC. Other than that, yeah, I mean it's pretty. You could have also taken a long here on ETH after that rejection here and scalp this whole move on ETH also. So this is pretty much it for today. I mean, is that your Forex model? Look, higher time frame Peter raise, then look for John liquidity. Yeah, literally it's my Forex model is that I look at the H1 candle, okay, and if the draw looks easy, so it's like a easy reversal pattern, I'll try to scalp the wick of the H1 candle high, and if it does not look like an easy draw, I just don't take it. But I only take reversals on Forex because continuations are lower probability. Jess, how many pairs do you trade? I trade only NQ literally, but I can trade everything. I have everything. Like, I mean, my model is literally you could trade BTC with it and make money. Do you risk the same amount on each pairs? I risk between $200 and $400 a trade on NQ. So yeah, today I lost 2 trades. I lost like I lost like $500 or $600 since the first trade was a small loser. But yeah, I mean, thing that I did wrong today was man, it was really not that bad, to be honest. The only thing that I did wrong really was taking that premature short. But this I would have stabbed it every single day, and the fact that I took this and that at BM was just good. I mean, this was better, but was not looking at the chart. And this is still good, but already took my profits here, $100. Made a quick $200 on that. So I'm still down on the day because of this trade, but because I had 2 losers, and this one ended up being a only one con that hit my TP, and the other got stopped to break even. But I mean, still a good day. Still some stuff to learn about this day, and just had to remember the fact that Monday, no news Mondays in June, July, May and stuff are not some days that you want to risk a real live money. Okay, you want to be trading firms, prop firms, evals. After joining your Discord, I just made a switch from Forex to futures. Yeah, really good decision. I mean, Forex is a pure scam. Literally, all the fucking brokers are kind of sketchy, kind of scammy. You have you're trading something that is super manipulated, hard to predict. It is super hard, man. There are spreads. It's literally not the same conditions. But once you trade something like NQ and you see some things happening over and over again every single day, really easier to take trades on, and you really don't need that much to make money. So yeah, thank you guys for the one showing up. A lot of trades that I could have taken today. Took 4, won 2, lost 2 on the live, so that's fucked. But the real chop happened there. So I mean, the real bad loss was this one, and yeah, the real bad loss was this one, and because it was a little bit too premature. 3 minutes, as it was a 2 minute too premature. This was the thing, but still overall, the good bias, good draw, everything was right. Like all my analysis here will if you keep the same analysis every time, you will get paid. That's the important thing. You can't look at the outcome of every single day, because you don't know. Okay, you just don't know what because you're basically how the statistics work is that you're gonna have losses and wins randomly distributed. So if you're going inside a lose streak, you cannot start doing some dumb stuff and start to change in strategy hop. Okay, you cannot do that. Okay, you just need to follow your data and trust your rules, trust the process. If you lose, you lose. If you win, you win. That's it. This is trading. The whole game of trading is literally all the work you have to put in is before you go and enter the market. So I hate people that are saying like, oh, I need live exposure and stuff. Yes, you do need it, but you probably need more backtesting than live data exposure. So yeah, thank you guys so much for stepping in. Do you guys have any questions? Because these are the best time to ask your question, because I'll just answer it easily. Like I'm not looking at taking any trades or anything, so anything, even if it's forex, even if it's advice. Ask anything you want, guys. But yeah, man, plenty of trades I could have taken here, but not trusting the 15 though. Like you could trust it, but never. I don't like to enter that high on the trade. Okay, I would take that 15 to tell me when we get an inverse breaker, but I don't like to enter like this, because the thing is, it could easily come back to discount of this range and force you to have a 27 point stop for no reason for a 10 point scalp though. I mean, like, you have always the good draw, but what's difficult in scalping is finding the exact entry where price is going to reverse. So you need to be if you don't like scalping, I have two models that are good, that are purely based on the H4 candles sweep. So I would play the 2022 model, and I would look at the H4 candle closure and the H1 candle closure also. This is what I would look for, and try to attack the high or the low based on the draw that I found here. So even there, okay, you could have, you saw that we swept liquidity. Once we closed back bullish, you know that the draw of this high will get attacked, so it's an easy scalp towards these highs. Okay, boom. So here, once you see that candle, you could have taken a scalp inside of this fair value gap here. Okay, definitely. How many months trade of backtesting do you think that consider be a good model? You need at least 1,000 trades. You will not like what I'm saying right now, but you need at least 1,000 trades. Or if you don't have 1,000 trades put in, you're gambling, bro. You're actually gambling, because you don't know all the in and outs of your model. How many? It's still backtesting. I still backtesting, but I didn't find something that fits me. Do this before going in live markets. That's super important. Do not try to find something that happens inside the live market, and don't try to take trades that you don't even know the outcome in a 5-year span. Like you need to take 1,000 trades. You just need. If you don't take 1,000 trades, you don't know anything about this strategy. Like 2,000 is 200 is too small. 2,000 is super good. 5,000 is even better. But once you start to and have more than 2,000, this is when every single trade you know everything about the strategy, the edge. 1 year of data is enough, I think. No, not at all. Not at all, because not all the market conditions are the same. Right now, the 2023 market conditions were super bullish. If you bought every single time at the beginning of the day, you would have been rich. But it depends. Like it's all quarterly. Sometimes a year would be like this. Sometimes a year would be bullish. Sometimes a year would be during the retracement, and sometimes it will be absolutely bearish. So yeah. Have you been? What's the longest trade have you been that I held? I don't hold trades. I'm assuming that I'm lagging right now. I don't hold trades at all. I'm a super scalper. Like I'm scalping the 5-10 points. Okay, so thank you guys so much. have some internet issues right now. But thank you guys so much for stepping in. Really, I love you guys. See you guys tomorrow on the live. Those will be better market conditions for sure. So shout out to y'all. See you guys tomorrow. Peace.